Good afternoon, Scott Redler, T3 Live. It is Tuesday. It is the end of the quarter. So what does that mean? It means that's when some hedge funds are going to be, I guess, looked over or looked under a microscope to see how they did versus the indices. You'll have traders think about where they're at for their year. You know, are they in the same pace as last year, or it's the end of the month and it's the same thing? Did you make enough money to pay your bills? Have you been in too much size? Have you been buying highs, selling lows? Have you been fighting trends? Like everyone, starts to look into, where they're at. And, I will say for this year, to me, it's been a very tough year. Okay, I see a lot of bigger traders struggling with the liquidity or the lack of liquidity. You really need to be in, the right names at the right time and sell almost perfectly, in order to be able to maneuver any type of size and any names out, a lot of names out there, especially the last, month or two. I feel like in the last month, lots of liquidity's dried up. It's been very erratic. It's felt like we would be pulling in for bigger corrections at times, but it wouldn't happen. One of the dynamics that I think is happening that's hard for traders, including myself, that's risk averse, is we try and use like the 8 and 21-day moving average as your line in the sand. If we're above it, stay long. If you're below it for a few sessions, maybe look short, and then if we get down to the 100-day, 150-day, chances are look for some longs. But every time we get to the 100-day or so, everyone's talking about a 10, 15, 20% correction, and that's when shorts press and risk-averse traders are out of the way, back in tactical, and then you get some kind of quick elevator up where shorts get squeezed and longs that were prudent have to pay back higher probably from where they were, and you keep chasing your tail every time we have a 2 to 4% correction, because even in the same way IBD goes from market correction into market uptrend to market correction, and every time they go to market correction, it's the bottom. By the time they get to market uptrend, we're back at highs, and you pull off, and because there's been no excessive follow-through. And then you read the headlines about what's going on, what just happened in the Ukraine, what happened in Syria, what's going on in Syria and Iraq, and then in Hong Kong. So there's always something in the back of your head. But meanwhile, it's been hard for some people to be short, and and every time you try and be a little risk averse, it feels like you're caught flat-footed. When you look at the trend of the SPX, you'll see that you know what I'm talking about and why you think perhaps there could be a bigger correction every time we do get that 4% correction. I know the trend is your friend, okay, which it is. And if you look at this weekly chart, going all the way back from just say start even in October of 2013, this trend intact. All right, weekly chart, 21-day. Every time it's got there, everyone said it's probably going to break it, and it's held. Okay, and it looks pretty damn strong. You go to the daily chart. Okay, take a look at it this way. You've had intermediate trends and upper trends. Okay, your upper trends, here, remember this little breakout failure created a correction. This head and shoulders top, because I've done this in so many different webinars and whatnot, this created a little bit of a down move. This breakout failure, another down move test. This upper trend broke right there, held. Same thing here, upper trend, broke, held. So all of these upper trends have caused many 2 to 4% corrections, but every time you get to this spot, every single person out there, they start getting Mark Faber on, they start getting Schiffy on, they start getting everybody on, and everyone's talking about how it's got to have to get to the 200-day, which it hasn't done. So here we are getting close again to this inflection point, and I want to be like, is this time different? Is it not going to hold? And to be honest, I do not know. This was your push through failure on Alibaba, and then this was a little confirmation that it was a breakout failure that caused some weakness. You could say that there's a descending channel building here, okay, and we're holding right above the 100-day, which has been good support. We're having a little trouble here at the 50-day. So it's interesting to see what's going to happen here into the first week or so of October. I can't legitimately say that this is the low of this move, and no one can legitimately say that this is the high of the year. So we're all trying to figure it out. Everything else is a guess. Okay, you have at least something to do tactically, okay? We talk about the red dog reversal, okay? Here, okay, it went below, just say the prior day low by one handle, and you had a, what is this, almost a 10-handle move and a little follow through. Then if you were looking for a short, it pressed above the prior high here, okay? So if you waited for it to go above 1981, get rejected at 1985, you could have got short here in the spiders or the futures, whatever, and made yourself, almost 10 handles to the downside. So there's some intraday action to use as they, try and screw everyone below levels and squeeze shorts above levels, and this is what happens. It happened, here too. After 3 down days, this was a nice trade, but then you got bagged the following day, okay? But anyway, just, these active short-term trades are very useful, if you're not trying to really position yourself for macro moves, which anyone who really watches this is not positioning themselves for macro moves. You just want to try and take advantage of the market and trade trends and continue to trade them until they break, so you know how to, whether you're buying dips and playing breakouts or shorting rallies and, pressing on downtrends. And right now, who knows what's going to happen right here. So that's why I'm pretty flat. So with that being said, one thing that's helpful is just know why you're trading a stock. Know if you're trading it for momentum. Know if you're trading it for a 52-week high trade. Know if it's a swing trade versus moving averages, that you're in a tier 1 and you're looking to get to a tier 2 or not. Or if you're just looking for a scalp versus the ranges. So with that being said, let's just go first. I went over a lot of the new issues today in the morning call and just talked about potential strategies and put them on the radar and figured out, try to figure out how we could go about it. Okay, let's go over BABA first, which hurt today. Nothing you can really do about this. Okay, you look at the chart, go here to BABA, okay, and it did look early morning that it was going to break above this descending channel, something I've been waiting for. So above the prior day high of 89.70, some people bought it. I actually missed that trade. Okay, went to about 90.80 the first time, and I think I bought the first pulling down to like 90.25, and then figured, maybe this is it. Maybe this is the time. I was playing for a breakout of this trend. Okay, you look at the 5-minute chart. It was pretty powerful. Okay, you go to the 5-minute chart of this first move. Okay, it happened quick. Okay, so what I did is, so just so you could see it here. So this was your first move. Okay, that happened before 10 o'clock and put a high in. I bought this dip thinking, okay, this is pretty good into this 89, 80 or 90. And that's when I even sent out a tweet saying I'm in Alibaba versus the lows. And then the question was, would you get a secondary move? All right, here you are, quick move, very fast, very furious. And would you get a continuation above 90.40, or was it nothing? Was it just a move that got negated? So in my head, I'm like, what, if it starts breaking below here, chances are there's not continuation to this flag to the upside, that I probably have to be out of some, and then I got stopped out of the rest, or I put my stop in somewhere around here, okay, because I was like, I'm not in this for a hold, because who knows what's next. I'm in this for a trade, holding above here, and hopefully a move back higher. So this is what happened. It started to break this level and continue lower. So I had to get stopped out of some, or at least if you had a decent amount of size, you reduced, and then it broke below here, and I think that's where I got stopped out of the rest. And what are you going to do? There's nothing you can do about that, and it closed pretty weak. So it's up to you on what you want to do next. For me, I was playing Alibaba for a breakout, or for a break of this downtrend, and it didn't work. And now, who knows? Maybe it needs a week, maybe it needs a few sessions. I'm out of it. It's the way it is. Another stock we talked about was Cyber. Okay, something different. Look at this one. This one, if you played it for a little breakout of this small trend, and it's only been public for 4 days. Oops, what did I just do there? Let me see if I can go back. CYBR. Close this. Let's go CYBR. Okay, so here you look at this. Okay, I wasn't sure how it would do, if it was going to be a red dog reversal. That's what I talked about, or just right smack in the middle of this. And here you had a little downtrend. You could probably see it better on a 60-minute, and it closed on the dead highs. So you had to be in this one, not in BABA. Okay, then you look at something like RWLK. This one has been trending pretty well. Okay, let's go to the daily. And this woke up yesterday, gave another quick trade through the prior high, even gave you a small trade above 35, and then it kind of stalled. Went to 35.50 and still looks okay. You know, if you're in it as a swing versus this area, okay, you're just sitting in it. If you were playing it for momentum through this, you're still okay. If you were playing it for momentum through this, you probably took some off, but this still looks okay. Then you go to Loco, okay? This stock, in my opinion, has just been horrendous. I've lost so much money trying to buy it above 36.40, and it hasn't worked. But I'm not married to this, and I'm not a fund accumulating it, so I'm trying to trade it. Okay, and if you look here at Loco, okay, this looks pretty good. You know, it still looks fine. I bet you some people are having a lot more success if you're long it versus 34 versus trying to play it for extra for a breakout. I remember I tried it here, had a little follow through, got out when it traded back below this, and then when it went back and didn't hold at least a third, so I was out of the way and I didn't sit through this noise. Perked up here, so I put it on the radar, tried to break out above this, couldn't really. Still looks okay, but if you were in like just a tier 1 in here and you got into tier 2 trying to break above 36.40, you know, maybe you sold some strength, but if you didn't, you had to get back to tier 1 because it's not ready yet. It's not ready for this huge move through the prior IPO highs. It's got to probably have a few earnings and show earnings power. Okay, you know, G Pro was something we talked about not chasing up here, and it had a pretty volatile day. The reason why you get excited about new issues, you look how long this took. This actually took one earnings, which was bad because I remember I was actually long it into it. I was long options and came back off, and then this is when I regrouped and stayed in the channel, and then this was that buyable breakout above the prior high, and then boom, another nice setup. And today held in pretty strong. I bought when it was up $4 on the VTF. I bought the puts. When it came all the way in, I covered where I sold a third, and now I'm holding 2/3, and I'm going to wait. I don't know if it's just going to need to trade within this new little flag and continue up and squeeze the Jesus out of all the shorts. That's why I went with options, because my risk was premium paid. Or does it have a few inside days, break this low, and let the 8-day catch up, somewhere in here. Stock's been a really strong stock. Last time I got a little wishy-washy, didn't pull in much, but I think a little sideways action would be great for a better trade, a meatier trade for people. We'll see. Then you have Mobileye. Mobileye was really strong yesterday, okay, and a lot of us took it home overnight. So my rule is the following day when it's up $1 or up 3%, you sell some. Then if it comes back below a prior high, maybe you sell a little bit more, okay? And then I remember Mobileye traded around a little bit, put a low in, and then came off. It looked like it was holding, and then once it broke the low, I'm like, I'm out of Mobileye. And I didn't have to sit with it all the way down to the test of the 8-day. And then at the 8-day, you're like, oh my goodness, maybe it holds a 21-day, and that would be horrendous. But held in there pretty well. Still, a stone throw away from here. Maybe with a little time, it continues. But again, you had to figure out what you were trading for. Did you buy it all day this day, which was a nice wide range bar, and into a little bit of a momentum gap up? Or did you buy it here and you're saying, I don't care, I'm staying in this thing as long as it holds a 21-day, because at some point, I don't care how long it takes, it's going to make new highs. Okay, those are all things you got to ask yourself as you're trading. And then across the board in other things, Apple been acting better. We talked about in the morning call today that it's away from the danger zone, but I don't think it's ready to just break out yet, but it's looking pretty darn good. Here is your upper range. It's in the game. I'm not in any. At some point, I'd like to get some back in here. At some point, I think it breaks above this, but it could use a little bit of time. Facebook still trending, but every time it pushes through and comes back below, it feels like it's going to fail, and it doesn't. But this is Facebook still above the 8 and 21-day, no real power, but just trending. You look at this. Again, reasons to be excited about new issues and learn how they trade. I remember this cup and handle pattern. Okay, this was your descending channel here. It gapped up after earnings. You could have been a buyer. You could have waited and not went through any of this noise. Okay, in this is funds accumulating and making your nice cup and handle. You could have waited for that and then started trading the trend. And I remember it was 33 for a few sessions, went above that high here, and boom, went above this, and another, boom, and then here's where we are. So all in the scheme of things, if you've been in it for this entire time, you don't care that it pushed through and there was no momentum today, because at some point it probably gets above 80. It's just not getting there with momentum, which is what momentum like, momentum traders like. Twitter, similar, it's hanging out here. I owned it overnight, and I'm just not in it for tomorrow. If it starts getting back above this with some volume, maybe I'll get back involved. It still looks just fine, but I'm just getting antsy, and we'll see what happens next. LinkedIn has been weaker, so has Yelp. LinkedIn looks like it's going to break below this at some point. You had that wide range bar right there. Some would say this is a bear flag. Here's your pole, here's your flag. Below this, it could continue lower, so we'll see. Tesla also a bit weaker. Remember we talked about this, the upper pennant above the prior high. Which way was it going to go? It gave us some clues that it could be to the downside, and then that happened. And then since then, it's just been, stair-stepping lower. It has a descending in nature, so it's Tesla. We're all used to being scared that sometime it's going to go like this and break above that, or have that. That's what we like to play. So at this point down here, any rally makes it hard to hold the shorts, but at some point it does still feel like it's working its way to at least here. We shall see, and then at some point maybe we get a descending channel here to go. But at this point it's below the 8 and 21 day. It's lost momentum, so it's been off the A list. You don't see me trading it that much or talking about it that much. Same thing goes for Netflix. In this market, they're selling it into moving averages versus buying it. Netflix was a great momentum move that actually ignited the high beta names back in May, and then you had your descending channel here too. I remember the red dog reversal right there, ignited, bull flag, continued, and then it broke right here. So really, in the scheme of things, it's just corrected a little bit, but if you got out here, you had a decent short, little bull flag. Remember trying to buy it here for a move up, and it was sold into the moving averages. Same thing happened here. Opened above on the, I guess, whatever that movie was that they're talking about, to start putting movies like House of Cards. But anyway, it was sold into that. It wasn't reclaimed. So some things a little different versus what we've seen recently. And now look at the Russell, guys. You haven't seen me touch the Russell. Just talk about it for market complexion, and it's getting it's at a pretty crucial area here. For this entire year, you had this huge move since before in 2012. That it's at this point it's been going sideways, which is normal. You can't expect this type of move to continue forever. So you need some kind of consolidation, and it's been giving you descending and ascending channels to trade. Okay. Remember when it broke below the 8 and 21 day here, this could have been your short, and then you had lower highs, and then right here, when everyone thought it was going to break, you had a small red dog reversal, broke the downtrend, retested, that could have been your long right there, or here, gave you a move back to highs, and then what happened again? This time broke the ascending channel below the 8 and 21 day to the downside. Then you had a descending channel once again, broke it to the upside, and then it broke the, the 21 day right around here. Okay, and then that was that Friday engulfing bar, and now, that's what you could have been doing all year. I know people have been talking about being short all year. Well, good for you. You're great at it, I guess. Anyway, this looks pretty nasty at this level here, because if this were to trade, it's below the 21 day, it's below, the 200 day below all the moving averages. It probably would trigger more selling, across the board. You have this spot, you have this spot. You go to let's go to the weekly. For the IWM. Let's see what we see on the weekly here. Weekly, it's still going sideways, but again, it's a little wishy-washy. And then this area could happen. So we'll see. We'll see if this becomes a headwind over the next week. In a way, it wouldn't be so bad, because that would help. Look, that's why these people are so scared about this. Look at this perch that the S&P's, hanging on. And then you draw this trend from all the way back here, that support doesn't come in until there. So, every time it gets close there, it makes a little sense to be a little risk averse, because you don't know how long this upper accelerated trend is going to keep intact until you start seeing some, tests of lower moving averages. Okay. So with that being said, if you take off some risk when you break the 8 and 21 day on the daily, and you feel flat-footed when the trend doesn't break, at least you were safe. It's fine. If you sold right when we broke 1990-ish, okay. You've had chances to get back in, and we probably will. Remember this? This is when the world looked like it was falling apart. You had this small descending channel. You broke above it, held above it, and you could have bought right here and enjoyed that move, and not, been worried about whether you're going to see that. So that's about it. You know, the quarter's over, the month's behind you, get past it. Start, you know, if you've been down and not feeling good, the way traders get traction is you get a few good green days. You narrow your focus. You don't trade 10 stocks, you trade 3, or you trade 1, or you trade 4, whatever it is. If you were trading thousands of shares, you trade less and get green, make some money. Let it build. Start thinking straight, start thinking clearly, and then all of a sudden you start trading more stocks, you start trading more size, and then you get back to where you were whenever you were thinking better and trading better. So there's still another quarter left of the year, and the fourth quarter typically is where I tend to make, you know, the majority of my year, so I'm kind of optimistic. You know, every quarter is different, every year is different, but, you know, again, don't harp on the past. Hopefully you're working on some things that you've been, you know, doing well, and or working on things and not doing the things that have been shooting yourself in the foot, and just start rebuilding. There's a quarter left. The year, you know, is almost done, and you still can, you know, put it together and start making progress. And if you are doing great, congratulations. You know, you're in the I think the sparse few, or you're just, you know, using ink trading and you're shorting things for, you know, by paper trading them and calling the top and then saying you're right. I don't know who does that, but probably not trading. Whatever. This is just a little joke. So with all that said, tomorrow starts the first month. We'll see what happens. The first of the month, the quarter. Do weak sectors get rotation? Do the strong sectors pull back because they've already been marked? Lots of little question marks in the first few days. You know, do we continue to hold the 100-day? Do we get back above the 50-day in the S&P? Does the Russell, you know, was thrown out the window because it's been weak? Does that all of a sudden do a fake breakdown and come back up and squeeze the shorts at that 109 in the IWM? Lots of things to look at. Best way to do it is be prepared. Read my note. You know, I talk about them. I give levels on all these things in the Redler All Access note. Hopefully, you know, you subscribe to it. You know, and then we have a 20-minute video that everyone's available to watch with Redler All Access versus the 5-minute, you know, Express. So there's some other resources you could use out there besides watching the recap and doing, you know, whatever it is you do. So look for your resources and use them. And that's it. Big announcement coming tomorrow. Look out for it. Very excited. Have a good night.